Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com talks about the meltdown of the Turkish currency and how the markets are doing. Trends Journal publisher Gerald Celente comments on tariffs, Trump, Canada, social media, China, and the latest from Occupy Peace. President of the Public Banking Institute, Ellen Brown, fills us in on what kind of banking reforms are needed to get our governments back from the brink of deficit chaos. Plus, following the show, we'll have company showcase updates from American Manganese President Larry Reaugh and Aben Resources CEO Jim Pettit. We'll talk to Ross Clark right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
Good to be with you, Jim.
Ross, we have a bit of a currency crisis happening in Turkey. And, of course, this all seemed to have started a while ago in Greece, then Argentina. Is this thing expanding?
Well, and put Italy into the foray as well. It reminds us of previous times that we've had of currency disruptions and the fact that what starts in one small area can move fairly quickly. And in the case of Europe, these southern nations have just been having so much trouble over the last couple of years. And with Turkey now added to the list, we've got a 12% move overnight, I think as much as 15 at one point. And then that leads to potential bank exposures throughout Europe. So, flight to quality, we're back to, or flight to safety more so than anything else, is the name of the game as we're finishing off the middle part of August. So at this point, U.S. dollar strength. We've got the euro sitting at the lows of the year, U.S. dollar at the top end of the year. Been a flight to U.S. bonds as well. We're up a full point on Friday to finish off the week, so that's pretty strong. And interestingly enough, the bond market has been in the process of creating a pretty decent-looking base if we look back at it over the the span from February forward. You had a big hard break into February, and everybody was worried about higher rates. You had a secondary low in the bond market in May as more fears came out there. And now we're actually putting in a higher low in the bonds. So it could very well be that the bond market is at least creating a temporary low here and take away some of the talk of pressures as far as interest rates are concerned.
Gold, have people been going there yet?
It's been very stable considering what you've seen in the currency markets. You got the gold market spent the bulk of Friday in that 12.10 to 12.15 range, not giving up ground like most other items that are priced in U.S. dollars. In the heyday of that market, back in the bull market for gold, action like this in the currencies, typically we'd have had a $20 to maybe $50 a day in gold, but you're not seeing that right now. This market is still out of favor, and all the things that we look at technically are overextended on the downside, and it's going to need a catalyst, and this should have been a catalyst to create a move. Technically, we want to see the hourly charts get up through 12.19. You want to see the daily get through 12.32 to show that there's a bottom in place here. But I think it's just going to be just a good, solid bounce off a bottom, not the beginning of a bull market move.
Base metals, have they picked up, or is copper and those other metals still in trouble?
Well, most of those metals topped out either in January or in May and have had some pretty good pressure into the latter part of July into August. Stability starting to show now. I mean, it's not copper. I mean, it's aluminum, it's zinc, it's nickel if you go across the board. They've all had some pretty good sell-offs. And, we've got copper sitting around 272. It could be ready for a decent bounce, maybe into the 290-ish range. But overall, if it's going to base out, typically copper bottoms take the better part of 3 or 4 months. So this could be just a reaction rally back up, maybe a few more tests of this support area. Not enough to get terribly excited about. For some of the miners, if they get oversold enough here with a decent market sell-off, they could be attractive from a trader's perspective. And you have to remember that from a seasonal aspect, the stock market typically has been weak September through into October historically. And more recently, maybe in the last 10 or 15 years, that's moved a little forward so that the highs tend to be more in July, and August becomes the beginning of the break. There's this anticipatory move. If you know something's going to happen, then you react ahead of time, and I think that's what we've been seeing more over the last couple of years. What we're watching for on the seasonals for the S&P is if we can get a close below the 20-week moving average, which is at 28.24, and there's a good support line coming up about the same spot, that should be the trigger that gives us the bigger, harder correction into the September-October time window. Still think that's going to come about, but as a technician, we have to wait until the pieces start to fit into place. We've got the things that tell us that a top could be coming right here, but let's see what happens once the support levels are violated.
Ross, thank you so much for being on This Week in Money.
Always a pleasure, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Trends Journal publisher Gerald Celente next on This Week in Money.
Always consult your investment professional before making any investment decision.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Gerald Celente, publisher of the Trends Journal, available online at trendsjournal.com. He's speaking to us from historic Kingston, New York. Gerald, it's great to have you back on This Week in Money.
Always great being on with you in This Week with Money, so thank you.
Gerald, the Trump administration seems to have put the Trudeau government on ignore when it comes to trade talks. Now the Trudeau government has picked a fight with Saudi Arabia, or maybe they picked a fight with us first when we criticized their human rights record, and then asked for 2 human rights activists to be released from prison. Is this a bad trend for the Trudeau government?
Well, the trend is bigger than that for the Trudeau government. I mean, when you look what's going on in Saudi Arabia, for example, bravo for them for complaining about it, and it's much worse than that, actually. They put several dozens of women that had protested their treatment. Where's the Me Too movement on this one, man? How come they got lockjaw what the Saudis are doing to women? And so when you're seeing the reaction that the Saudis did, that shows you also their reaction and what they're doing in Yemen that doesn't make the news either. It's people call him, the crown prince in a kingdom. I mean, who made this stuff up? What, did the prince become a prince after a frog was kissed by a princess? A kingdom. It's a mafia that began in 1934. So I applaud the Trudeau government for doing that, but when you're looking at the circumstances of the globe, that's a very important indicator because the Middle East is about to erupt. And I'll get to that in a second, but the other part of your question, the Trump ignoring Canada, yes and no, in the sense that NAFTA is going to be renegotiated. There's no question about it. It's not helping the Americans. We have a merchandise trade deficit both with with Canada and Mexico that we never had before at these levels. So there's going to be a readjustment. It's only about doing business. No one would do business with anyone if one person's making all the money and the other person isn't. So that's what we see. As far as the Trudeau government, he's a politician. And I tell people to look up the definition of politicians. Google it up, the definition of politician. And after they say, person running for political office, blah, 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 the second part is a person that's manipulative and devious, typically to gain advancement within an organization. The Trudeau government, the kid born on third base and thought he hit a home run, he'd be a nobody if his old man, wasn't the Trudeau before him.
Also, with this file, Canada gives a lot of aid money to Jordan. Jordan's siding with the Saudis on this. Canada gave $50 million to the Palestinians, and they're siding with the Saudis. Should Canada stop giving money to people who disagree with them?
I'm in favor of no nation giving any money to any other nation. Mind your own business, stay home, take care of your own people. When you get your country in perfect condition, then have the arrogance to say what you're going to do with my money, my tax money. It's not Canada's money. It's not the United States money. It's everybody that's working and trying to make a buck and save a buck that they're stealing their dough and giving it to somebody else.
When you talk about that, in other words, as long as I have to step over homeless people sleeping in front of my house, then perhaps our government shouldn't be sending money overseas.
You got it. And not only that, it's one after another. Until everybody's standard of living increases, till the environment is clean, till transportation is working well, till so many different things. We have a real education system rather than the brainwashing one that they impose upon all of us. So there are so many things to do in your life before you could tell other people how to live theirs.
The Canadian dollar is so dependent on the price of oil. What do you see ahead for oil?
Well, right now we're looking at oil it's up and down in the mid-70s range as far as Brent crude goes. And it looks like it's going to stay in that range for a while until we see what happens, of course, by November when we see the tariffs going into full blast with the United States, not the tariffs, the sanctions, that the United States has put on Iran. So if there's a shortage of oil and there's Middle East disruptions, and oil prices then will rise. But right now, we see them staying in the range that they are in, around the $70 to $75 a barrel Brent crude. Again, minus a wild card, and there's no wilder wild card than the Trump card, and they're looking for Iran to produce zero oil. That's, quote, their quote, zero. So if that happens, then you're going to see oil prices go higher.
The Trump administration has asked its allies to go along with their sanctions and not to buy any Iranian oil. But how many allies do you have when you slap tariffs on all their products?
Well, again, when you're looking at people wanting to do business with America, you're going to see that most of them are going to shut Iran out. They did it under the Obama administration, and they'll do it under this one. The business of business is business, and these countries and companies don't want a chance of losing any. And the restrictions that the United States, by the way, we wrote about this in detail in our Trends Journal, and we had our mid-year trend report, and one of the top trends was mass murder market shock. The mass murder meaning what's going on in the Middle East, and it's the United States, Israel, and Saudi Arabia ganging up against Iran, and that's the mass murder part. The market shock is if this really takes off and Iran is destabilized and war breaks out there, as I said, you're going to see oil prices go to the $80, $100 a barrel range, and that will crash equity markets, and it will crash many economies. Because what we're also seeing, you mentioned about the Canadian loonie and so the currency, the United States dollar is going up because interest rates are going up. Oil is dollar-based. So if you're in India and you lost 7% of your rupee this year, and you got to pay for that oil, which 80% of the energy you're importing in dollars, it's going to be difficult for you. So the stronger the dollar gets, the higher oil prices go, the greater pressure on economies around the world.
Is the censorship by social media platforms likely to lead to their demise?
This is the most disgusting element of censorship that I've seen in my lifetime. It is an outrage. These corporate masters, that's all they are dictating to the people what they should hear and what they should listen to. I got these little jerks telling me what I could understand for myself. What are they, my mother and father, and I'm 6 years old? Who the hell are these people? I'll tell you who they are. They're the Silicon Valley con men and the corporate corrupt media. That's who they are. It's a disgrace. Here America's bombing and destroying countries under the name we're going to bring them freedom and democracy as they're robbing it away from us. Not only robbing our freedom of speech and First Amendment rights, you go up and down the list. They spy on us. They start wars illegally. They violate the Constitution on basically a daily basis. And this is just another great violation of the Constitution, human rights, and freedom of speech. I need a little sucker like Zuckerberg to tell me, Gerald Celente, what I should read and understand, or the little clowns below him, or in Google. Who made this crap up? A bunch of crapsters, that's so.
Should big tech monopolies be broken up?
They should all be broken up. It's a multinational takeover around the world. You name it. Name the field: retail, agriculture, mining, manufacturing, banking. If you can't add it up, then you didn't graduate the third grade. It's a multinational takeover. Look where all the money's going to, the 1%. Everybody, Amazon, Apple, $1 trillion Apple gave. Yeah, look at the great social things that Apple does. A rotten Apple. They do crap. You had guys like Carnegie. Oh, Carnegie was terrible. Yeah, maybe he was. But there was a thing called the public library system, and look at the beautiful buildings that they build. Oh, Bill Gates is giving money for people to get vaccinated. Yeah, great. He's own stock in the drug companies. What drug companies? Drug cartels. All we are slaves in Slavelandia working for the multinational plantations. There used to be laws in place that prohibited, but slime balls called politicians, Republicans and Democrats in America, did away with the Robson-Patman Act, Sherman Antitrust Act, Clayton Antitrust Act that prevented this. Of course they should be broken up, unless you like being a worker on the plantation.
Are China's currency, stock markets, and economy in trouble?
Yes, they are. Their debt levels, where they got a debt-to-GDP level of 300. A good level is around 70. They have, you look at their data going on in infrastructure rebuilding, in investment into the nation, it's down to 1994 levels. One miserable piece of data after another. And they're in a retrenchment after the panic of 08. They dump more money into their system to pump up that phony thing more than any other nation. So there's going to be a pullback on that as well. And again, let's go back to oil. They're the biggest importers of energy in the world. Oil prices spike, that economy goes down. And look at copper prices. Copper prices are very important. They're an indicator. Copper is used from heavy industry to high tech. And right now you're looking at copper going into bear market territory just since June. I mention that because China buys about 50% of the copper produced each year. So if China's not buying, that's a signal of what's the slowdown that's going on.
We'll have more with Gerald Celente next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Reaugh Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Gerald Celente, publisher of the Trends Journal. Gerald, is President Trump likely to win this trade war with China?
Yes, and as well with other countries. For example, China has a $375 billion merchandise trade deficit with America. If you and I are doing business, and I'm making $350 billion, and you're making $375 billion, and you're making nothing, are we going to keep doing business? Are you going to tolerate that? No. So you're going to I'll make a deal with you. I'll tell you what, Jim, you're a nice guy. I've been on your show a lot of times. We'll make a little adjustment over here. But you can't blame China for this. Again, you have to blame the multinationals, the corporations that sold out their nations. And that is what they did was, again, because of all the deregulation, they moved their manufacturing sources, they outsourced them to slave labor countries. And China was one of those before they joined the World Trade Organization. When China joined the World Trade Organization in 2000, 5% of their population was middle class. Today it's over 35%. They got more middle class people than the population of Canada and the United States combined just as people. So what happened is that the big corporations sold us out by giving away their technology, because that's what China demanded, set up all their shops and manufacturing processes, and got the stuff made over there. So China knows what they have, and the business of China is business. The business of America and Canada is war. So that's what the Chinese aren't getting into war. They're doing business all around the world. So they're using what they have that the Europeans, Canadians, and the Americans gave them, the corporations, and they're leveraging it to maximize their profit opportunity. And that's where we see them going. So yes, they're going to make a deal rather than kill the golden goose.
President Trump mentioned the steel imported into the U.S. was crap quality. Do other countries have the ability to make high-quality steel?
Sure they do. And, just because Trump says it, that doesn't make it real, We know that. So it's not about that. And again, there's crap quality coming in and out, and it's not as though America is the finest producer of the finest products anymore. Wherever has been, there's always been other nations doing things better than other nations do.
Does China control more things in the U.S. than it should?
Well, it's not a question of what it should or not. That's a value judgment. The business of China is business. The business of America is war. So America decides to go slaughter people around the world, spend trillions of dollars doing it, give their money to the defense contractors and the cyber industrial complex, and China decides to build $60 billion worth of infrastructure improvements in a third world nation like Pakistan. And then when President Xi visits Africa, he goes around all the countries from Senegal to South Africa, meeting with the people and making deals with them so that they can capitalize on their resources and their opportunity. While America goes in and we're fighting ISIS, so we're going to bomb and kill everybody we see that we don't like. So that's what this should be, it's a decision. And China's decision is to keep making more money.
Has China been wise to avoid most world conflicts since the Korean War? Or Vietnam, I guess.
Well, again, that's it. You mentioned that Vietnam and Korean War. Oh, it's commies, right? I'm prime Vietnam War era age. Every day I used to wake up, are they going to get me? And I wasn't smart enough to be against the war. I'm a kid. Matter of fact, it'll look cool, watching those guys and those planes and all of this and that. I just couldn't imagine me being in a foreign country getting shot at. But anyway, you go back then and they warned us, those lousy commies, those dirty commies, they're taking over Asia, and those dominoes are going to keep falling if they take over Vietnam. And before you know it, those dominoes are going to be falling on the shores of California. And I'm not making that up. We learned to hate those commies. They had us as kids hiding under desks. Simpleton, moron, jerks. The same teachers that you got today are forcing kids to go under desks if an atom bomb goes off 25 blocks away, like it's going to save your life. Those are the same stupid people that are shoving the same crap into your head now, like that was going to save your life. But they taught us to hate the commies. Hey, who are you just talking about? Oh, that communist China. Oh, yeah, Oh, it's okay to do business with that communist China because we're doing business with them now. So going back to war, look at the propaganda that they sell in the most stupid, arrogant language, and people buy it and believe it. Is China going to get into a war? Not if they can help it, because again, the business of China is business. But the point I want to make is the arrogance of all those slimy little presidents and prime ministers that taught us to hate those communists. Hey, until we're doing business with them, like Bill Clinton said, then they're okay. And they bring them into the World Trade Organization. What hypocritical SOBs. And by the way, the senator's sons never go fight and die. They only send the rest of us.
We'll have more with Gerald Celente right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN.V. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Gerald Celente, publisher of the Trends Journal. Gerald, are President Trump's tariffs an art of the deal move to usher in real free trade without tariffs, barriers, or subsidies?
I don't know what the bottom line is going to be, whether it's going to be real free trade or not. But, I'm a believer, just speaking for myself, of self-sustaining economies. I don't want to buy slave labor goods. 97% of our shoes and shirts and clothing in America come from foreign countries. When I was a young man, most of them were made here. If I want to buy a luxury good from overseas, sure, bring it over. Bring me over that fine French wine, those Armani suits, and some good prosciutto. But for the rest of it, let it be made in my nation, so my people in this country could have a good earnings capacity. I hear all of these liberals talking about buying local, of course, which I'm a strong proponent of. I buy all the local product that I can. I want to buy national as well, and I want it to be good quality. We have all the human and natural resources we need in this country for everyone to make a good living. And you can only do that when you have a lot of manufacturers doing it rather than the big ones. It's the big ones that want the free trade. They're the ones that want it the most, from the retail sector to the Walmarts to the big manufacturers. All my old relatives, may their souls rest in peace. I have different things from a number of them, and I look at the glassware made in Syracuse, New York. You look at all different things made in America, and you had a strong middle class lifestyle. Now in Slavelandia, USA, we have 3 people Jeff Bezos from Amazon, Bill Gates, and Warren Buffett, who makes nothing other than money, have more money than 60% of us combined. So that's why I believe to bring back manufacturing to your country, if you have the resources to do it, the human and natural resources, and many nations have them. The mass exporting and importing of goods only really helps the multinationals, whether they're in the retail business or the manufacturing business.
Will the next round of Trump tax cuts be good for the U.S. economy?
No, they haven't been good for this part of the U.S. economy. They've helped mostly the 1% again. And I'm not making that number up. All you have to do is go to the Tax Policy Center, and they will show you that 82% of Trump's tax cuts went to the 1%. The next round of tax cuts he wants goes all to the 1%.
Can the U.S. markets hit new highs in the second half of this year?
Yes, because of the tax cuts. When you're looking at where the money's going, as they're repatriating it and getting the tax benefits, it's going to stock buybacks, which are at record levels, up 57% this year, expected to reach over $1 trillion in stock buybacks. What's going to slow it down is when interest rates go up too high. So we may see more of a boost in the equity markets temporarily, but long term we believe that it's on a downward hit.
Why is there so much pressure to raise interest rates?
Well, there should be, in the sense that all the interest rates, low, negative and zero interest rate policy has done is to fuel the equity markets, because the big corporations borrow money for nothing, buy back stocks, mergers and acquisition activity, and it's a war against the savers. Once upon a time, people used to have extra money and put in the bank and got interest rates on it, no more. So all this is doing, the low interest rates, is fueling the Ponzi scheme to keep the equity markets going and getting the rich richer.
Does the price of gold look like it's bottoming?
Yes, it is. We've said this I've been on your show, I don't know how many times, but I've said this for years, that gold had, 5 years I was saying, gold had to break over $1,475 an ounce, $1,450 an ounce, and it hasn't, and for it to break over that, and once it broke over that, then it would spike, and that the downside risk was in the $1,200 to $1,100 range. That was years ago, and now we've been saying now for the last year that the bottom is around $1,200. And one of the reasons being is that it costs $1,200 on average to pull gold out of the ground. So they're not going to pull it out and lose money by pulling it out. So we believe it's near the bottom.
Should President Trump be good for the price of gold?
Not good for the price of gold. It would be bad for humanity if he and the Israelis and the Saudis launch war against Iran, because that's going to be the key element that's going to drive, as we see it, gold prices back up, because as interest rates keep going up, the dollar keeps getting stronger, and gold's based in dollars, as other commodities are, many commodities are, then it's going to be very difficult for gold prices to rise. So if war breaks out and oil prices go up in the Middle East because of war, that's what Trump is going to do.
What are you seeing in the U.S. real estate market?
It's slowing down. All the numbers show it. Just even today, new mortgage applications came out. They're down. The higher interest rates go, the lower the real estate markets go. It's a fact of life.
What are your thoughts on the U.S. dollar?
Well, the dollar's strong because interest rates are going up and the other currencies are so weak. The European Central Bank announced a few weeks ago that they're not going to raise interest rates until when? Maybe next summer? And they're in negative territory. Oh, the Bank of England raised them. Yeah, what are they? It's 75 basis points. Yeah, they're at nothing. So when you're looking at interest rates in most countries, the major nations, they're very low. And their currencies are very low. So the emerging market currencies particularly are taking a big hit. So the dollar's staying strong, not because of the strength of the U.S. economy, certainly not because of its debt level. It's primarily because the other currencies are so weak.
What's a safer investment, Bitcoin or gold?
Well, we just sent out a trend alert just today, and the headline is Cryptocurrency Bubble About to Burst, Trend Lines Flashing Caution.
Is this going to be just like what happened last winter when Bitcoin was around 20 grand and then just fell like a rock?
Well, from the time we sent out that release to the time I got on the air with you, it fell another 4%.
President Trump's focusing on the fake news media. What do you think his next move should be?
To call them what they are. They're not fake news. They're prostitutes. They get paid to put out by their corporate whore masters. That's all they are. It's not fake news. It's junk news. It's propaganda. It's dumbed down news. So fake news is it's an overused expression. We were talking before about the robbing of our freedom of speech by the censorship. Oh, propaganda is fine, but no conspiracy theories allowed. Not allowed to say that 9/11 may not have happened that way. You're not allowed to say that Saddam Hussein didn't have weapons of mass destruction and ties to Al-Qaeda, like the propaganda that was lied to us about. That's called a conspiracy theory. So propaganda is proper, but conspiracy is bad. So it's not fake news. They're prostitutes. They get paid to put out. They're corporate whores, working for their corporate whore masters and their government johns that tell them what to do.
Does the New York Times have any credibility?
Not in my book. They call themselves the paper record. I call them the toilet paper record. I talked about selling the wars. They sold one after another, one piece of propaganda after another. Hey, remember that Saddam Hussein? He was bringing in those uranium tubes or aluminum tubes, whatever, and baking yellow cake. Yep, I remember that. So no, they're nothing. They're garbage paper. And you pick it up now. I've been reading papers all my life, and mostly beginning with the cartoons. I have a picture of me in college sitting in the bathtub, and a friend took a picture of me in the bathtub reading the Wall Street Journal. I'm in college, and the papers have shrunk to nothing. There's no reporting anymore. They fired most of the reporters. They're just, again, they've been corporatized, and you could thank Bill Clinton for that, the deregulation, 1996 deregulation, Federal Communications Act, that deregulated the media and put it in the hands of the bigs. So you don't have reporters, you don't have beats on the street anymore. And so what we're getting is not fake news, it's junk and dumbed down news. And now the newspapers, they used to be thick, now they're tiny little slivers of nothing. And when you pick up the toilet paper record, one page after another filled with huge photos to fill up the page rather than put print there. And that's a fact.
Is the walkaway movement from the Democrats a trend in motion?
Democrats or the Republicans, we need a new party. And when you look, for example, at the defense budget that was just passed, there's no Democratic Party. Out of the 48 senators, 41 voted for the biggest defense budget ever. In the House of Representatives, 139 voted for it, and only 49 voted against it. So it's not a war. There's no Democratic Party. We need a new party. And we don't want any parties. I mean, the parties are just a bunch of corrupt. We need more like what they do in Italy with the 5-star movement, where the people vote online and where they have a say, rather than you have a bunch of little political boys and girls telling you what to do.
Do you think it's time for more direct democracy? Because of blockchain, we could have pretty secure elections online?
Well, that's one of our top trends of 2018, blockchain democracy. They don't represent me, these people. I can represent myself. You want to go to war, let the people vote. Talked about those tax cuts, let the people vote. We could vote online. It's this moronic system of going to polling places. What are we, in 1823? I mean, you could transfer trillions of dollars worth of money around the globe each day, and I can't vote online. It may be hacked. Oh, like they don't hack the elections now? So yeah, with blockchain democracy, your vote is blocked. And once your vote is made, it's done. So to me, it should be blockchain democracy, which is an aspect of direct democracy.
Are we likely to see voter ID laws in the U.S. in time for the midterm elections?
Some states, but not most.
In Canada, every election, you have to present your ID. To us, it seems pretty strange that you wouldn't have to present ID to vote.
Well, what they do here is that you sign your name, they ask you for your address, and they match your signature to the other signature that you have there. So it's pretty, it's an old system. It's antiquated.
What is the latest on Iran?
Well, I think we said it all. Yeah. That they're not going to bend, and we're going to see how tough the United States gets with them. And as we've written about it in detail in our Trends Journal, it's a covert and overt action being taken by the United States, Israel, and Saudi Arabia to overthrow the government, the democratically elected government of Iran, and put in another dictator like they did back in 1953 when the United States and the UK overthrew the democratically elected government of Mossadegh to bring back the dictatorship of the Shah. So when you got a dictatorship in there, they're on the same mental deranged plateau as the people running governments in the United States, Canada, and other places. So the sick people get together very well, and they want a sick master that they could all understand and work with. So they're looking to put back another dictatorship in place, that's all.
We're here. There are currently over 45,000 sealed indictments. Is that a sign the swamp is being drained?
Nah, who knows? I don't know. But that's, more, the swamp's not being drained. I mean, you look at the people Trump's put on his administration. It's one swamp person after another, being with the new Supreme Court judge that they're picking, a guy born and raised in the swamp and worked in the swamp. So there's no training the swamp.
Is globalism being rejected around the world?
It's being rejected in parts of the world, particularly Europe, but not in the United States, not in North America, not in most of the countries, but primarily some of the more advanced countries in Europe.
Has Brexit hurt or helped the British economy?
It hasn't done anything to it. It's hurt it more because of the lack of direction, and so it's caused instability. But again, I'm a believer in a self-sustaining economy, and the only thing that imports and exports are helping are the multinationals to the greatest extent. So bring back, small businesses so they could serve the communities where they're at, rather than bringing in the multinational products that fill the shelves and the streets with their products only.
Is the deep state losing its grip on power around the world?
In some places, yes, but when all else fails, they'll take you to war. And they've done that over and over again. But the deep state isn't that deep, and that's the real swamp, and that can be drained when the people have a desire for peace and tranquility, but that's not in the cards right now.
What market sectors are you bullish on?
Right now, we're bullish, not on too many of them. It's kind of what you see is what you get, kind of sector. And when you look at the overall markets, they're overvalued and overleveraged. So, there's stability in some sectors, but we're not overly bullish on any of them right now. And again, we don't give financial advice, but we believe that for investors that want to speculate, for example, things such as gold are those kind of speculations.
What's your latest globalnomic view?
Well, the globalnomic view is that the world is ready for a great dimension of change, and you mentioned it before with the populist movements. And populist, of course, is a white shoe boy word, that to say that people are disgusted working in Slavelandia. So to us, the biggest global view is a return to more of an identity with your nation, rather than a global view of one size fits all. So that's what we're going to see. But unfortunately, with that, there's also going to be, racism and negative aspects of that as well. And racism being, if you're not of the same breed that I am, then you don't count. But a balance of that, we believe, is going to take place. And again, what really needs to make anything happen is peace on earth, and that's something that they don't even talk about at Christmas time anymore.
What's new with Occupy Peace?
Well, we're going to be launching next year an Occupy Peace Festival. So rather than just having speakers talking about peace, we're going to have great music acts, big entertainers, vendors with food and arts and crafts. So we're expanding Occupy Peace to make it a festival, to have liberty, love, joy, and beauty join the evolution.
Where and when will that take place?
It'll take place in Uptown Kingston, New York, next year. We don't have a firm date yet. And then we want to go nationally and globally with it by having Occupy Peace festivals around the world. So everyone listening, please go to OccupyPeace.com, OccupyPeace.com, and help us do it by putting your money where your heart is.
Gerald, how can people find out more about the Trends Journal?
Or you can go to TrendsJournal.com, TrendsJournal.com, and guaranteed you'll be able to read history before it happens.
Gerald, thanks a lot for being on This Week in Money.
Thank you.
My guest has been Gerald Celente, publisher of the Trends Journal, TrendsJournal.com. He was speaking to us from historic Kingston, New York. Coming up, President of the Public Banking Institute, Ellen Brown, next on This Week in Money.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol AESDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Ellen Brown, a successful author, the founder and president of the Public Banking Institute, and you can find her blog, The Web of Debt, online at ellenbrown.com. Ellen, welcome back to This Week in Money.
Oh, thanks, Jim.
Ellen, have central banks around the world been responsible for destroying economies?
Yes and no. Some central banks have done very well. For example, there in Canada, the Bank of Canada from 1935 to 1974 was brilliant. It made no-interest loans to the government to build all sorts of infrastructure. It was responsible for the St. Lawrence Seaway, and it helped with your health care or your, National Health Service. And so that worked really well until in the 1970s they changed the rules where now governments were not supposed to borrow directly from their central banks, but were supposed to borrow in the open market. But that wasn't exactly, well, I guess that was the central banks. Anyway, the central banks met in Switzerland, the Bank for International Settlements. I think in 1974 was when the Bank of Canada joined the Basel Committee, and it was the Basel Committee that set these new rules, supposedly because of the stagflation that was going on. But there are other explanations for stagflation. It wasn't really that governments were printing money or that central banks were lending money. If you look at a chart of inflation in Canada, it was really quite low all during that period from 1935. And when it actually shot up, and when the debt shot up, your federal debt shot up, was after 1974. So, but on the other hand, central banks today are probably the prime example might be the ECB, the European Central Bank, which has withheld money from different governments. For example, Greece. If Greece could have borrowed directly from their own central bank, the Bank of Greece, or the bank of whatever their central bank is, they could have done what Canada did. In other words, borrow interest-free from their own central bank, and they could have gotten themselves out of the hole they're in. But because the ECB cut off their liquidity, supposedly because they were in debt, but how are they supposed to get out of debt? They've, had one problem after another, and now Italy is threatening to leave, and of course England had Brexit. So that central bank situation is not working out at all, and I would say the Federal Reserve has done all sorts of damage in the U.S. too. I think there have been 15 times that they have raised interest rates, like several times over a short period, and since we went off the gold standard, and in 10 of those times it was followed immediately by a recession. So if you raise interest rates, you're going to trigger a recession, but that's their model, to keep money tight. It serves the banks, but it doesn't serve the local economy.
Should governments return to borrowing from themselves?
Borrowing from their central banks. Yes, I think so, because, for example, we have a $21 trillion federal debt. How are we going to, there's no way we're going to pay that off. everybody knows it doesn't get paid off. In fact, we slip further and further into debt every year. And the amount that we slip into debt is pretty much equal to the interest. If we didn't have to pay interest, we might. So, well, there was one study of France. If they hadn't had to pay interest after 1973, they would have had no debt. Their debt was basically accumulated interest over that period. We pay about close to $500 billion in interest every year, we the taxpayers, and it's estimated that by 2027 we'll be paying $1 trillion a year, which is huge. So if we were borrowing directly from our own central bank, which returns the profits to the government after deducting its costs, then we could eliminate the interest. You don't have to worry about the debt. Just keep rolling it over, as they do anyway. It's like nothing new to roll over the federal debt. That's what they always do.
Would it be possible to return to a nationalized central bank?
Sure, but it would take an enlightened Congress, or an enlightened president could do it, arguably, because the president can appoint the Federal Reserve board members, and of course President Trump is in a position to stack the board right now, but whether he would, so, you know, that's why I bother to write about this stuff in hopes that somebody will read it, they'll get some ideas, but whether he would actually stack it in the right direction is another question.
Is President Trump restructuring the reserve?
He definitely is in a position to, and will be appointing a lot of board members, and of course he appointed Jerome Powell as Fed chairman. But Jerome Powell has been called Janet Yellen light. He's pretty much, you know, following the same policies that she would have. In fact, I would say he's more of a tight money guy than she was. And the other people that he's got two that he has recommended that haven't been confirmed yet, and then he's in a position to appoint two more. But the question is how much he himself understands about banking. I don't want to purport to know more than the president, but he certainly could. But whether he would is another question.
How do you think President Trump would like to see the Federal Reserve function?
Well, he's expressed recently that he was not pleased with the Fed raising interest rates, that just as he's getting the economy doing better, then we drop back because of the higher interest rates, which of course raises costs and slows up productivity. So he has said he's not happy with them. And I think what he really wants is to stimulate the economy, whatever it takes to stimulate the economy. I think he's got like this sort of checklist of all the promises he made during his campaign, and he's just going through and checking them off. I mean, like one of the things he's going to do is get America first, get the economy going, and if that takes lower interest rates, then he's for that. And if somebody persuades him that it takes higher interest rates, then he'd be for that, I think.
How would you like to see the Federal Reserve function?
Well, it has a lot of potential. I'd like to see it operating the way the Bank of Canada did from 1935 to 74, where the government could borrow directly from the Federal Reserve, and they would have to change the Federal Reserve Act a bit, but of course Congress drafted it in the first place, so they could certainly change it, and allow the central bank to do basically quantitative easing for the people. So you could have interest-free loans for infrastructure, interest-free or very low-interest loans for state and local governments, maybe you could refinance the student debt the way they refinance the toxic mortgage-backed securities, just move the student debt onto the books of the banks and basically don't collect interest on it. So there are many things they could do. You could fund a universal basic income, and I would argue you could do that if done properly. You could do that without even having to raise taxes, that it would generate enough new productivity that it would generate its own taxes and the economy would stay in balance. The local productive economy right now is actually short of money. There's plenty of money sloshing around, as everybody points out. But I think there are two economies. There's the speculative economy, which is doing quite well, thank you very much. And then there's the local worker economy, which the people are heavily in debt. Consumers are, you've got like auto loans that are huge now that are defaulting right and left, student loans that are preventing students from buying houses, or all those things that are actually, buying houses doesn't necessarily stimulate the economy if you're buying an existing house, but every time young people move into a new house, they buy a washing machine and a dryer and furniture, and so they, it does stimulate the economy to have young people have their own homes, and young people today, most of them can't afford their own homes because they've got like this $100,000 debt over their heads that they can't get out of.
We'll have more with Ellen Brown next on This Week in Money.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Ellen Brown. Ellen, do you think President Trump is trying to take away the influence banks have on the Federal Reserve?
Well, he's no friend of the big banks, as he himself has said. I mean, he criticized them heavily when he was running for office, and as a businessman, he's had all kinds of run-ins with the big banks. But again, I don't imagine that he probably has the same sort of vision that we money reformers have about how you could totally transform the system and fix the central bank and so forth. I think he just wants to get the economy going, and if he needs the banks for that, well, fine, he'll put up with them. So, I mean, I haven't heard him, since he got elected, I haven't heard him ranting against the big banks.
Are President Trump's appointments to the board of the Federal Reserve likely to end up changing the business cycles of inflation and depression?
Probably not, because, I mean, it would be nice to think, I mean, if you put in a bunch of modern monetary theorists, for example, it would definitely change. But the people he's looking at or has recommended are pretty much, ex-bankers and economists and people that are sort of in the same neoliberal line that of other Fed board members. Plus, there's a question whether changing the makeup of the board is really going to do it. My thought is that what you need to do is change the Federal Reserve Act. I mean, change the actual mandate of the central bank. Instead of having it basically serve the banks, make it serve the economy and the public.
Is that how President Trump could make the Federal Reserve serve Main Street instead of Wall Street?
Yeah, totally. I mean, that would be ideal if they would actually change the language in the Federal Reserve Act. But I think he is trying in his way to, to stimulate, to help the working class. That's his base, and he's definitely trying to play to his base.
Should the Federal Reserve receive its orders from the White House and the Treasury?
No. I mean, the latest article I wrote was on that, on Trump and the Fed. And, I got a lot of comments saying, you want President Trump to run the central bank. But no, that's not the point. The point would be to change the structure of the central bank, or the mandate of the central bank, or basically give it the tools that the Bank of Canada had before 1974.
Are we likely to see the return of the U.S. note replacing the Federal Reserve note?
No, I don't think that'll ever happen.
former U.S. presidents who wanted to change the banking system were assassinated. Is there any hope that President Trump will be successful, or is he in the bullseye of some sniper?
Well, if you look at the ones who were assassinated, or, Nixon tried to change things and he got impeached, or would have been impeached, they said their mind. And one thing about Trump, he plays both sides of the game, so you can't really tell where he's coming from. So, he'll purport to go to war, and then he'll make peace, like with North Korea. So I think he might be more devious than others. He knows he's liable to get shot. Plus, he has his own private bodyguards, unlike Kennedy, who had official bodyguards. And it depends on. I listen to a lot of podcasts, so I like listening to the other side of things. Apparently, it was a certain faction of the military that put Trump in there, and they've got his back. So as long as they're keeping an eye on things, I think he can probably get away with quite a lot, but we'll see.
Is that why he has a record high amount of military spending this year?
That could well be. I mean, that's the thing. He does things to please the factions that he has to please. And then, he's pleasing them and not pleasing them at the same time, so.
We'll have more with Ellen Brown next on This Week in Money.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Ellen Brown. Ellen, would the world be a better place without banks?
No, we actually need banks. If I just finished a book called Banking on the People, I think we need to restructure the banking system, ideally. But banks are where money comes from. The Bank of England and the Bundesbank and many official sources are now acknowledging that banks don't just lend other people's money. In fact, they don't lend other people's money, that they actually create money when they make loans. And that, according to the Bank of England, that's where 97% of the UK money supply comes from, and it's about the same in the US. So you need them to generate credit. Basically what happens is you, the borrower, are generating credit along with the bank. I mean, it's sort of a partnership. The bank is basically guaranteeing your loan. If you went to the grocery store and tried to write out an IOU, the grocer wouldn't take it because he doesn't know you. But if you go to the bank, the banker will take it because he will know you. He'll take a lot of data down, and he'll maybe take some collateral. He knows where to find you. He can garnish your wages maybe, or he can come and collect in some way or another, and he's going to get some interest. So it's worth it to him to take this risk of guaranteeing your loan. So what he gives you is really bank money. It's not really Federal Reserve notes even. I mean, if you want them, he'll give them to you, but most of it, like 97% of it, is bank money, which is they just write the numbers into a checking account and say, okay, you wanted 100,000, here it is, and they write it, go ahead, write checks on this checkbook, and you do, and then the money goes into another bank, and that other bank maybe also have generated 100,000, which will come into the first bank, and so both banks' books balance, because banks all over the country are doing this, creating credit, and if they don't balance, then they borrow from each other just overnight just to make them balance, and then they give it back in the morning. So it's kind of a scam. And it could be done much more efficiently, which is what I wrote about. But yeah, I think banks do serve an essential function.
We hear President Trump is going to make changes to Dodd-Frank. What changes would you like to see, and what exactly is Dodd-Frank?
Well, Dodd-Frank was in 2010, it was the biggest legislation ever to supposedly rein in the banks. It was like 2,000 pages. Well, it was 800 and some, but they keep adding stuff more. So I think it's up to 2,000 and some now. But what they failed to do was to regulate the problem. So what really, the real run in 2008 was not a run on the conventional banks. It was a run on the shadow banking system, a run on the repo market. And Dodd-Frank doesn't touch that at all. But then the problem is, you can't really touch that. I've just finished this book on that, which is, you'd have to read a few chapters to really understand why that's true. But it's that liquidity, that shadow bank liquidity that the banks draw from, because they have to go through this rigmarole of pretending they've got the money that they don't really have. And so they borrow it overnight from the repo market. And the problem is, what if the repo market gets skittish and they get nervous and they take the money and it's not there? That's what happened in 2008, and it could happen again. But if they regulate that, then there won't be any deep pocket to hit up, and we'll be back to Jimmy Stewart and It's a Wonderful Life, that sort of thing. So I would argue, ideally, what they should do is we should all have an account at the Federal Reserve. There are actually some ex-Fed advisors and Treasury advisors and economists or professors who have written about this, that the banks have their own banking system with the central bank. And so we bank with banks, and they bank with the central bank in this whole reserve system, and the two don't cross. We don't get to bank at the central bank, but there's no reason we couldn't. And the central bank is a deep pocket. They've got the money. So you wouldn't need to go through all this rigmarole of borrowing overnight and pretending you had the money that you don't have, and maybe it wouldn't be there if there was a run, and then we'd have booms and busts and all that. You'd always have the deep pocket there because the central bank can't run out of money. So I think you could restructure the whole system so it would work much better than what we have now. But the current system is pretty rocky, and I don't know that they really can do it by regulation. They have to do it by changing the central bank, not changing the private banks.
Are there any jurisdictions right now where you think they have a banking system that really works for ordinary people?
Well, North Dakota, for one. They have a publicly owned Bank of North Dakota, which has been called the mini-Fed for the state. It's not exactly a central bank because it can't just issue, it can't buy things with the reserves the way the central bank can just create the reserves on its books. But it acts like one. It helps all the local banks and guarantees their deposits from municipal governments, and they're basically the banker of North Dakota, and they make very low interest loans for infrastructure and so forth. And that system does work very well. They didn't go down in 2008 with the others. North Dakota was the only state that escaped unscathed from that banking crisis, and the bank itself has done really well. It has a really good return on equity.
The uptick rule, where you can only short stocks on an uptick, was brought in 1938 and then removed in 2007. The stock market crash of 2008 followed. Should President Trump reinstate the full uptick rule?
Well, it would be a good idea, but they did, they did instate a modified version of it in 2010. But from my point of view, I don't see why they allow short selling at all. I mean, it's clearly speculation. It has nothing to do with the fundamentals of the company. The uptick rule was, it said that you couldn't short sell a stock, meaning borrow somebody else's stock and sell it into the market. And when you borrow somebody else's stock, they might not even know, they didn't tell you could borrow it. You signed some paper with your broker that you didn't even read the fine print on, probably, that said that your money could be lent to other people, or your stocks could be lent to other people. So they borrow it, the broker gets a commission for lending, gets some little amount of money for lending this thing, And so what happens is these investors get together and they all jump in and sell at once, and that brings the price of the stock down, and then they can buy it up cheap. Well, that's just clear manipulation and speculation. It's not real. They say that it's necessary for, basically for determining the real price of things, that otherwise you have irrational exuberance and people just keep buying. But that's not true. Just in the ordinary, like take Bitcoin. You can't short sell Bitcoin, and yet it's very erratic. It goes way up, it goes way down. You don't have to short sell it to stop it from, it went up to 20 and it came down to 5 or 6. And it wasn't because short sellers jumped on it. It was because, that too is, if you ask me, it's highly speculative. But anyway, it doesn't seem to me that you need to authorize people to borrow other people's stock just to sell it, just to make a profit. That's the only reason they do it, is to make a profit. It has nothing to do with the market and nothing to do with that stock. So yes, I think they should get rid of short selling altogether.
Germany has banned short selling. Do you think they're going in the right direction?
Yeah, I would think. Oh, really? All of short selling? I wasn't aware of that. Yeah, I think that's appropriate.
Well, they said the purpose of the stock market is to raise money to help businesses grow, not help businesses shrink.
Very good argument. I might have to write on that.
President Trump says he's returning the power to the people. Your thoughts on that?
Well, that's certainly his pitch. It depends on which people, again. Many people, as you know, half the country is very unhappy with him, but the other half is happy with him. So, hard to say. I think it's just a grand movie, and we just have to watch and see how it turns out.
If President Trump invited you to be a governor on the board of the Federal Reserve, would you accept?
Sure, but there's no chance that he would.
Why not?
I'm not a banker, for starters.
But you do know a whole lot about banking and how it affects people.
Yeah, well, I could definitely suggest that people like Michael Hudson is a professor. He would be great. Or Stephanie Kelton is also a professor, MMT. But, I'm a lawyer, but do they put lawyers on there? I don't know.
How can people find out more about the Public Banking Institute and your Web of Debt blog?
My website is, you could go to webofdebt.com or ellenbrown.com. And Public Banking Institute is publicbankinginstitute.org.
Ellen, where have you been speaking to us from?
I'm in Los Angeles.
Ellen, thanks for being on This Week in Money.
Thank you, Jim.
My guest has been Ellen Brown, successful author, the founder and president of the Public Banking Institute. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Gerald Celente, Ellen Brown, and thank you for listening. Stand by for company showcase updates from American Manganese CEO Larry Reaugh and Aben Resources President Jim Pettit. Don't forget, if you have any questions for the show or our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Oh, glad to talk to you, Jim.
Larry, what's cooking down there at American Manganese?
Well, work is proceeding on the pilot plant. I've had some queries about any grants that we were looking for. That's still in the works. It's out of my control. People have to realize that certain things are basically out of your control, And everything that we're doing right now is, aside from the pilot plant, is pretty much out of our control. Whether it's a company talking to us about potential partnerships or anything like that, it's really up to them to pull the trigger. Now, that said and done, I didn't pay enough or talk enough about the Cobalt situation the way it is today. And Cobalt has had a significant drop. It's actually in surplus. Again, the Chinese had pretty much overproduced. And now we're finding, to balance the books, that the biggest user was not the EV battery, but other aspects, and specialty metals and paints and everything else that use cobalt. Now, we're looking at a price this morning of about $61,000 a ton, and that's down from an all-time high 3 months ago of $98,000 a ton. What does that mean to us? If you go to our business plan, you'll see that it really doesn't hurt us that much. And, we first started, doing some calculations on what it would be worth to go after recycling lithium-ion batteries when cobalt was $10,000 a ton. So that said and done, I expect that cobalt is probably pretty close to a bottom here, but it could still lose some ground. But it won't have any spectacular run-ups for some time yet. But again, that doesn't affect us. And also, lithium continues to weaken in China. It's around $14,000 a ton. And, it's, again, overproduced. And so it's sitting on the shelf, and companies are not buying it at the moment because they expect more weakening. So that's what you have, and we've got all kinds of things happening out there on the global front, like the Turkey tariffs, which is knocking their currencies into the ground. And it's just it's a very uncertain time. You'd expect that gold would be going crazy, but it's not the only thing that keeps active. Our marijuana stocks and cryptocurrencies. The rest of the market, I've seen some spectacular results on gold drilling this year, and I'm not seeing the same gains that you would have seen, last year, for example. So that's kind of the market we're in. We feel kind of insulated from it because, the battery supply is going to grow. I just saw a number here from Market Research Engine that figured there's going to be 69 billion value of batteries by 2022. That's only 4 years. That's a lot of cathode material, and so we think the gate's wide open. If you were drilling for resources, you'd be happy to have that kind of an increase. And so it's and it doesn't cost us anything to have that kind of an increase. That's the product that us and perhaps some other people will be recycling down the road. So that's the. I haven't put out an update or a press release. We had an update here 2 or 3 weeks ago, and to be honest with you, that seems to generate selling, and rather than buying in this kind of a market. Seeing that in other companies, that do spectacular deals like the deal that was just done with Traxys, and the stock has lost about 15% of its values. That is a cobalt refinery. So it's a difficult time up there, but you just have to look at your opportunities that develop, and certainly any new shareholder coming in, this is a good level to get in at. And but we're very confident that everything we're doing, we're meeting expectations, and we think that it's going to be fantastic year coming up. We still think that this market will turn around, and probably starting this month, and we expect to enjoy that benefit along with our shareholders.
Larry, for new listeners, can you maybe outline what American Manganese does and why you're so excited about its prospects?
American Manganese is a specialty metal company that has developed a process that is patented in 4 countries, and that process is to treat very low grades of manganese at comparative costs, very low grades of manganese to produce electrolytic manganese metal or electrolytic manganese dioxide at comparative cost to the Chinese that are using much higher grades, 10 times to 20 times the grade that we are. We're 2 or 3%, so that's a spectacular bit of intelligence and a patented process that we control. From that patented process, we developed some additional lines on it, and we've applied for a patent to actually recycle lithium-ion batteries, and we've had great success. And we expect that we will be around 100% of the recovery of those cathode materials once this pilot plant is done. And that's all the cathode materials. Nobody's getting lithium back. We do. We get 100% of that. We get close to or 100% right now under lab conditions of the cobalt, the manganese, nickel, and aluminum. So that patent is pending. It's been published, and we do have interest coming in. I just had a email this morning from another big electric car manufacturer wanting to know if we're interested in having any discussions. Of course, we are. So it's just it's ongoing.
Larry, where are you traded, and how can people find out more about American Manganese?
American Manganese is traded on the Toronto Venture Exchange under the symbol AMY, traded in the U.S. under the symbol AMYZF, traded in Frankfurt under the symbol 2AM, and our website is AmericanManganeseInc.com, and you can contact the company at 778-574-4444, or you can send me an email at LREAUGH@AMYMN.com.
Larry, thanks for the update.
You're welcome, Jim.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on August 10th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jim Pettit, CEO and President of Aben Resources. Welcome back to the show, Jim.
Hey, thanks, Jim.
You've got some good and big news coming out of the Golden Triangle of BC.
Yeah, we put out the news yesterday. It's pretty spectacular. We had to get this hole out quick because it was good. And yeah, it's the first of our holes of this season. A little refresher course last year of our 9-hole program. 3 of them were into this new zone that we called the Boundary North Zone. All 3 of them hit mineralization as described. It was, high-grade core, very broad mineralized zone around it. They were very broad intersections with very high-grade core in the center parts. And very impressive, we thought at the time. So this year we moved our drill pad to the north, which is straight back from what we were drilling last year, about 40 meters, and drilled in the same direction as those holes from last year. And lo and behold,
just because we got hit it at a different angle. By the time we reached there, it's not the 45 and 60 that we drilled last year. We drilled 45 and 60 from the new pad. So by the time it encountered that zone, they were coming in slightly different angles from last year, because last year's were obviously closer. It's very impressive. The first hole has 4 intercepts in the hole, and they're all separate, and they're all very impressive. They're all over basically 30 grams, and obviously the highlight hole was 38.7 grams over 10 meters, and within that is 62.4 grams over 6 meters. That's 2 ounces. Very impressive stuff. And then the other holes, the other intervals, represented 22 grams over 4 meters, 3.9 grams over 13 meters, 8.2 grams over 6 meters, and they all had silver, pretty consistent with the gold. So that's good. And the deepest point of that hole with mineralization in it was 125 meters deep. Even the holes might have been 300, but that's a very shallow looking zone. And for us, we're very excited because we're 230 meters away from the old Noranda hole from 1991 that got us excited about this area. And that was 11 meters of 30 some odd grams and no follow-up. There wasn't anything. There was a couple of holes that were punched in the exact same angle as that hole beside it and didn't hit anything. And what we found is you have to be drilling across the structure. They drilled into the structure. And so what we think now is we've got a new zone to look at, and we're just starting at the north end, and we will eventually head south 230 meters. And our feeling is because of the soil anomalies that we know are there, we've done all the sampling and soil testing and et cetera, there's big anomalies through there. We think it's all probably one zone.
Jim, can you just give us a bit of background for your company?
Well, yeah, Aben's got three projects underway. This one, which is obviously the flagship, the Justin project in the Yukon, which is tied right on to Golden Predator. They've got the big 3 Aces deposit they're defining up there. We've got something very similar to them. We call it the Lost Ace. And as a matter of fact, they're drilling right beside it now. They've moved their drill up to, right onto our border. So that's good news for us. Our guys will start work up there in another couple of weeks. We've also got a project in Saskatchewan called the Chico. We can drill that all winter. It's straight south of SSR, which is now what Silver Standard's called. They bought the Claude Resources mine, the CB and Santoy deposits, and have optioned a lot of ground to the south for future exploration, and they're drilling on that right now. That comes right up to our northern border, so we're watching very carefully. We'd like to get in there next winter. We did go in this year and didn't actually drill because the natives in the area there had questions about why we were there, et cetera, et cetera. And we thought it was all taken care of, but turns out they were having a banned election. So we decided to just retreat and get out of there and not worry about it until next year. We'll have it all properly documented and everything signed off and everyone's consulted and et cetera, et cetera. But not to belabor the point, it wasn't a big deal. We could have stayed, but we chose not to. I didn't want to ruffle any feathers up there.
Jim, where are you traded?
We're traded on the TSX Venture under the symbol ABN. We're in the States, OTCQB under ABN.V, and we are also in Frankfurt, E2L2.
And where can they get more contact information?
You can go to info@AbenResources.com, or you can call the office at 604-687-3376 and ask for Don Myers or Jim Pettit.
Jim, thanks a lot for the update.
You bet. Thanks a lot.
I've been speaking with Jim Pettit, CEO and President of Aben Resources. Our conversation took place on August 10th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.